Hello and welcome to today's closing bell. Unfortunately, we can't be in the studio today because our main man Belvedere is off this week, so we're broadcasting from home. But still, lots to talk about. Murray's going to begin with the banking system and the banks, and see how they're shaping up. They've had a big rally. So what's the outlook for the big banks there? Very important for the overall market. Then, US dollar, what's going on there? Looking very weak, and obviously this plays out in the commodity markets, which is really good for Australia, and things seem to be heating up on that side of things as well. So we'll take a look at that, and then we'll cover off on a couple of the good calls that we've seen in the last couple of weeks on the closing bell. Lithium, rare earths, tin, it's all happening. So let's get into it. Murray, what's happening, bro?
Yeah, well, I've just been, I've rarely look at the banks, quite frankly. I let them run. I know that most of the members and people probably have most of their money in the banks anyway from the super system, right? We're all forced to be long the banks massively. They're, 25% of the whole market. So I often just leave them alone and don't and ignore them. And they've been running pretty hard, as you know. Everyone's talking about CBA all the time, how overvalued it is. And I've just noticed there's been a bit of pretty serious selling going on just in the last few weeks with, real bit of heat coming out of them. And it just started to look interesting to me where the CBA, potentially is setting itself up for a good shorting position for those that like that sort of thing. You could hedge your overall portfolio a bit doing something like that. And it's a bit of a trade. We know that it's way overvalued from all the passive money flowing into it, and then the momentum chasers, they all jump on the back of the passive money, and then it just feeds on itself and gets a bit crazy. But if it turns and the momentum players switch off and the price drops, you're going to see less money flowing into them, and the heat could come out of it pretty rapidly. So I just thought I'd point out how things are looking.
All right, let's do it because it is a very important stock for the market. So, and as you say, like most people have so much money in CBA.
That's it. So looking at this chart, obviously this is going very long term, going back to the recession in 1990. Who wouldn't have loved to have bought the banks back then and be sitting on big dividends? I'm sure a few of you out there probably are, and they love them as you go into retirement. Massive dividends and all fully franked. But this is the run we've seen in this last period where this is just in the last year or so where we see massive breakout at around $100 after a few years of consolidation.
Now, I'll just quickly jump in there and say, even then, people were saying it was overvalued.
Yeah, exactly. Around then, that's when the brokers, the big brokers, were coming out and saying, oh, it's getting a bit stretched here, and some of the fund managers were selling out, and the people were actually shorting it. I know we're going to have a look at Regal later, which was a good call of yours recently, and I think they were shorting the banks and ended up getting taken out of that position on the way up. So this big breakout occurs, and this run all the way, one of the most hated rallies for the brokers I think they've ever seen, and a lot of the guys that are underweight the banks, their performance goes down so badly when you've got CBA, the biggest bank of all, going vertical, and they're underweight. They've got to make money, a lot of money elsewhere, just to make up for that, so that they're not underperforming the index. So this is where people end up chasing it and being forced to enter it as it keeps going. So it's really gone bananas. Let's just call it that, hitting a high of 190 bucks. And that's moving from just in the last year or so, going from 100 to 190, and that's the biggest bank in Australia, one of the biggest banks in the world now, apparently. So I think it is nuts.
With very little growth.
Yeah, very little growth. Everyone's just waiting. When is it going to fall over? I think it only falls over when all the people who have been shorting it have finally given up the ghost and bought back all their stock, and fall into the grave exhausted. Yeah. Then it'll finally drop. So if I'm just very simple analysis for me in this sort of situation is, first of all, I want to see the monthly sell pivot. A market can't sell off very far without the sell pivot. That's why I look at them. So if we're looking at this up close, the sell pivot is just when you've got a market marching high, you can see here, There's your highest bar. I'm looking at the low of that bar, and I need a monthly close below the low of it. So there's your monthly sell pivot there, one of them there. There's another monthly sell pivot there. There's a monthly sell pivot there. So you can see you can't have a big sell-off without one. So doesn't mean that's going to be the high, because it could be a dummy. But my point on this at the moment is looking at CBA and seeing this. I'll go in close just so everyone can see what I'm talking about. After a massive run like we've had, and knowing that it's probably way overvalued and just getting a bit silly, is once you've got this massive high, and you can see there's the low of that highest candle, potential monthly sell pivot coming in. Now, my point would be, even if this one isn't right, I'd probably have a go at it as a trade, and if you got it wrong, I'd get out and then have a go at the next one, because we know that it's way overvalued. So your upside on capturing this as a correct trade is really quite large. So you can almost have, a couple of wrong trades in this and still probably end up ahead. So
the only thing I wonder most is, would it really fall over, or will it? I mean, it can sort of top out and just sort of slowly.
Yeah, it could go sideways, but there could still be a mean reversion event. Even that would be enough to see it fall quite a long way, because it's so overstretched. If I looked at just the normal setup, even just looking at where the 20-month, even just a mean reversion event back to the 20-month moving average, that's quite a big one. That's all the way back at $144. That's $30-40 lower than here. So as a trader, if I'm looking at this and I'm saying, and I've got different calculations that I can't tell people about how I get into a better position, but once I've got a position on, really I'm saying, if it creates a monthly buy pivot or goes back above that high, for example, I'm out. So I'm not taking too much risk. If I'm only risking a small amount where my actual entry point is, and what's my upside if this is, completely way overbought and they're correct saying it's only worth $100. So your risk reward on this is pretty massive. You can make a lot of money, and it's just could be a good hedge on if you've got a big long portfolio and you're thinking, oh look, the market may come off a bit. If anything, CBA is going to come off if we do sell off. So you could short that against your other portfolio and just create a bit of a hedge for yourself. But so
sorry, I was just going to say, you alluded just before we started too that, I mean, the classic move is to go from the banks into the resource sector, and there is at least some fundamentals coming together underneath those ones.
There does seem to be a bit of money flowing in. I've seen BH. Let's have a look at. This is just recently. There's been quite sharp selling in the banks, and if we just look at BHP recently, look at that. So this is a monthly of BHP, and there's what will possibly be a monthly buy pivot after what's that? A year and a half or more of selling pressure in BHP. So we're seeing what could possibly be a buy signal hitting in BHP, and also if we look at Fortescue, just quickly.
And I was just going to say, while you're bringing the chart up too, that every broker had iron ore going to $80 by the end of the year.
Well, I really thought it would. I'm amazed that it's back up at 100.
Yeah.
Maybe it will fall over, but if all this tariff thing gets all settled, maybe it's just saying, look, growth is actually going to bounce back. It's not going to be a disaster, and things are going to start powering again. But here's Fortescue. So I've shown people this before. There's your massive rally and the correction. So after that massive correction, I'm looking at that range, is how I look at the calculations of what could set up as a trading opportunity in that one. So the way I look at that is to make a calculation off that range here and say, where are the opportunities if I want to join this uptrend? You're waiting for the false break of the low. So there's, stop losses are below that low. And look, it didn't even get very far below it, but it would have taken a few people out. And then we've turned back up. Here's a monthly buy pivot coming in here. So that's, again, a potential to resume the uptrend.
I'll just add in too that I wrote about this, was it yesterday, that they just released their quarterly numbers, which were fantastic. They had really good production, good cost control, they make so much money.
Yeah.
Again, if
And,
iron ore
and,
hold, the fundamentals are there to support it. There's just so much
they're
money.
running away from hydrogen and all their silly
Yeah.
things which they've blown up some money. I knew they were going to blow up money on that, but I guess it made him look good. So we've got Rio, and again, look at the money coming back into Rio. So this
And
is
with Rio and BHP, they have copper exposure too, and now copper's starting to heat up. So there's a logic to the market positioning around that.
yep. And so there's the last up wave, and I'm just doing the calculations off that one. Buy and sell zones there. There's your point of control. Finding lots of support at the point of control. We've been selling off for a year and a half, and potential of a monthly buy pivot here. So maybe that's going to be the one that works. So there's a lot, as you said, a lot of things pointing to money coming, maybe bit of money coming out of the banks and going towards the resources, which is possibly a bit bullish, and maybe that feeds into that US dollar story.
Well, let's talk about the US dollar. I was just going to say that because that's so important for commodities, and the US dollar is looking ropey, and it has for a while, which you've been talking about for a long time on that.
Yeah. Well, I think I've called that one pretty well. I've got to say, I did actually call the US dollar as a potential short all the way back up at 107. So, and the way I looked at this, let's just get the chart up for you. So here's very long term on the US dollar, and you can see it was stuck in a range for a very long time, and it's actually probably approaching the midpoint of that range. So this is going back to 2015, and you can see it was pretty much just stuck in a range, false breaks everywhere. But then a few years ago, we had this massive run in the US dollar from about 88 up to 115, and that's where I'm making the calculations off that wave. And if we just have a quick look, I'll try to race through this so people can get on with their day. We've got the move that we've had in the last few years. You can see that when the heat came out of this big run, it went straight back to the midpoint, so that point of control, and it spent years basically sort of trading above there, trying to hold above that level. And then we had the big rally on the back of Trump. Everyone getting excited. Oh, Trump's going to make the US dollar fly. So the market rallied really sharply into Trump's election.
That was a bull trap. Look at that. Bloody hell.
Got it completely wrong. Got it about face of what Trump really wants. So there's the sell zone and the buy zone of this major wave that we've been in, and you can see it. This is where I was saying it was a sell up here, saying, look, if it turns back down from this sell zone, watch out. And you can see the monthly has really been quite sharp on this down move, where you've got, there's your monthly sell pivot, and then look at those bars as they go down. The selling pressure really quite strong, and we've got another bad bar there. So on the monthly, it's all still looking really weak, even though it's been rallying the last month or whatever, big squeezes. When you look at the big picture, it's just turned down into long-term downtrend. It's broken through major support. So it is, look, it's oversold on a weekly or a daily, but it's still seeing selling pressure, which is telling you that really big picture selling is happening. And it all makes sense. If trade flows slow down a bit from tariffs, people getting money out of the US and putting them into Europe or Japan. You're seeing Europe stocks going absolutely vertical at the moment. So, this theme could continue. And my point was just that there's not much support around here, and another test of this low around 96 on the US dollar index, it still can look pretty bad and have a continuation sell-off down into that buy zone area. So, looking at your portfolio from that point of view, we're just saying US dollar probably still has further to go, and maybe a lot further to go. There's no reason why it's going to just pull up at 92 or 95, but it probably will in the short term, is my guess. So if I was to look at this, I'd say it's probably, if it did have a big sell-off here, it probably will have some sort of squeeze and then have to decide down the track what it wants to do. But so that's how we should be looking at things. Gold,
And that,
I've been looking at palladium, platinum, silver.
I was going to say that'll play out in the bond market too, right? Because that's a huge pool of capital, and the US dollar is important for all that. Remember when the bonds were rattling the share market recently and all that sort of stuff? So that's an important dynamic to watch. Is the point I'm?
Yeah, well, the US bonds, we still don't know what's going to happen. It's so up in the air. I don't know which way they're going to break. You would have thought rates would be coming off, but the way that Trump's going, big spending bills, possibly needing to issue a lot more debt. Maybe the long-term rates are going to go up and inflation's going to be under pressure going up. So market's going to want higher returns. And you're seeing that in the Japanese bonds. They're getting absolutely creamed. And no one seems to be worried about that at the moment. But they're looking terrible.
Interesting. All right. Well, let's flip to some of those little commodity ideas that we've been tabling here at the closing bell.
Yeah, well, we looked at Syrah last week, wasn't it?
Which one?
Syrah, the graphite.
Yeah.
Yeah, I think we looked at that, just last week, and then if we look at the way it traded this week, it was pretty not a bad idea. So we spoke last week with it at about 36 cents, and then on the Monday it shot higher up to 44 cents. So the buying pressure has come in to these graphite plays. And I think even RNU, have they? Well, yeah, so Renascore, they're holding in there, but they've had a big jump as well. I think that's a fairly good graphite project. Still early days though. There's nothing to say that it's all over and it's all happy times again in that sector. But also, what did we look at? Lithium. Recently, we were looking at a few of them. Yep. I was talking about how they were looking like mineral resources. If we have a look at this, let's look at the monthly. People might remember, a few weeks ago, I was saying, check this out. We've got the massive run up to $96. Mineral resources, as you said, iron ore's turning up as well. So it's had the absolute crash. Where did it get to? Down to the bottom of the buy zone there. And this month will be the monthly buy pivot. So basically I'll be able to set up calculations on that from possibly entering that as well. I've already gone into a few, which I can't talk about. But you can see there, really nice run since we were chatting about it just recently. Also, some of the other ones. Liontown Resources. My computer's a bit slow today. Look at that. Bang. Up again. That was, I think, under, 75, 80 cents or something when we first spoke about it weeks ago. Look, it was a monthly buy pivot last month. You can see that one. That was actually last month. Got a signal. And again, similar to mineral, there's your massive run. Here's your clear out where everyone runs for cover. Down to the bottom of the buy zone there. Monthly buy pivot and bang. Up to nearly $1 on that one. And what else did we look at? I think we looked at PLS.
Linus.
Yeah, Linus. Were we looking at Linus as well? Yeah, and ARU. So just to look at those, just so people see those structures in real time of what I was talking about. But this is, people, especially who aren't members of what we're doing, to understand that these structures are very real. A lot of people aren't looking at them. This is stuff you're being taught that is not something that's in some trading textbook anywhere.
I was going to say, if you look at that chart, very very few would go near that chart.
No, exactly. It looks terrible. No one's ready to. People end up, look, this is what I'm saying, sometimes in these situations, the best trade is being aggressive on these sort of things when it starts to bounce from this sort of area. Because, imagine if you waited until the long-term uptrend. How high could it be before we get these things there going up? The stock could be up at $3, $4 before the trend actually changes. So I think trends are far too slow as far as using as an entry sort of signal, those sort of moving averages and that sort of thing.
I was going to say, when it feels comfortable is usually a terrible time.
Exactly, and this feels uncomfortable jumping on it. But here we have coming into the end of the month and really strong close. Look, it's going up into resistance, So it probably will still see selling pressure, which will shake out the new people who have just bought. You know, I don't buy just on the monthly buy pivot. I think that's what people who are not amateurs, but who are still haven't worked out the real calculations of where the proper levels are. So they're probably going to get shaken out. But it's just setting itself up as a very interesting dynamic. If you're thinking about it from a 5-year, 10-year point of view, this could end up being the entry point that you look back on in 5 years and go, God damn it, why didn't I buy PLS down at $1.50? It's at $10.
No, I'm writing about this in my issue this month, actually. It looks like a screaming opportunity if you can look long term, and they deliver.
And you came up with a great one just recently too, RPL. You asked me to have a look at that one, and look at this. We were talking about how it was beaten up, and you were thinking, look, it's just the valuation. The value is there, so it's worth having a stab at it. Can't get much worse, sort of situation. And we were looking at this structure, retest of the lows, monthly buy pivot there, and a bit of work. And I think we were talking about it when it was down here somewhere, and it's starting to turn up. It is actually starting to look like it's trying to.
Well, interesting. They came out with their update this morning, in fact, and they upgraded their guidance of performance fees again. So that one, the tailwind is coming back underneath it. So again, it's a bit of a slow burner because they've got to rebuild from the previous troubles that they had, kind of thing. But they're on their way now, so it's still looking very interesting, that one. Again, if you can look a bit long term, I still like it.
Well, markets are certainly flying higher. I'm worried, the banks could end up throwing a bit of a spanner in the works, and I do feel like we're still a bit toppy. So I am still a bit wary of the overall market, I've got to say. But I think we've got to wait, have a think about this August 1 thing. Is Europe going to push back against America? Is the trade war thing going to get out of hand again? But maybe if it all gets sewn up, we're going to really blast off into some sort of melt-up with everyone relieved that all the tariff things all done and dusted and everything's going ahead. Or it could be the August 1. I mean, it could be a bit of a moment where there's a reality check on the market. So I'm just watching and waiting. We've looked at this ASX for a while, and I'm just wary of the false break. It happens so often. So this was the old high before we had that tariff tantrum sell-off. And we've had a massive run, and anyone who is short has been absolutely killed. But this is where I wait and I say, look, if this does actually see the selling pressure, let's say we get a weekly sell pivot soon, I'd be pretty wary of a potential sell-off from here, even if long term it's going to turn back up and take off. Things are pretty ripe to disappoint, I guess. But you need to wait to see the actual signs of it, because at the moment it all still looks pretty hot.
Yeah, well, it's been such a screaming rally. It's been an absolute belter. Alrighty, well, I think we can leave it there, Muzz. You've given lots of information. So, of course, I mean, just example after example after example lately of your system and how it works and how it can benefit people. I mean, I don't think it's an issue to say, like, there's been lots of money-making opportunities lately, and across all different sorts of sectors. Like, we just had gold there for a while, but now just so many things seem to be moving, and a lot of those
flying again.
Uranium, yes, a lot of those companies that were beaten up or taken down, or they're just starting to put out better news, and that's all the signs that we want to see. So,
and your favourite ResMed is finally breaking out too.
Well, we'll flag it here. So, we'll bring up the chart because you got on this one a while ago.
No, we had a great trade in ResMed.
Next week.
I believe it's the cornerstone of your super. So the higher it goes, the better the holiday house you've got down the track. So here we go. We'll go into the monthly on this, and it's a beautiful chart. I've got to say, I loved our trade in this because it was one of those rare setups where you've got a stock that you want to get on, and it's difficult to get on, and it's trending like anything, which means it's a massive value creator, And then we had that whole Ozempic thing happen, and everyone was like, because does sleep apnea, and everyone was like, oh, everyone's going to be thin, and no one's going to need a sleep apnea machine, so ResMed's going to go bankrupt, and it's just a panic set in,
It was
which was
big panic,
ridiculous. And look, maybe it happens down the track, but it's not going to happen overnight. So we had this massive correction, which I see as that ABC correction, where you really get a big clear out, and then I'm waiting for, and it's such a strong uptrend that if we have overlap, and this is where, just to make it clear for people, this is A here, this is B, and then this is the C low, which goes below A. Now, when things turn back up above there, that's when you've got the potential for it to resume the uptrend, basically. So we jumped on this one at.
And when you say we're in retirement trader, yeah.
Yeah, in retirement trader, $25. So we got on as soon as things turned back up, and I got a signal. I was like, I want to be on this because I don't believe this whole malarkey about the Ozempic ending any sleep apnea. So we got on $25, took some money pretty quickly, and we've just been riding it ever since. And here it is, busting out above the high. So the question is this thing going to now start trending? Now, it might do the old false break, but tell you what, it's looking good. It's already done work.
Let's flag the risk. So they've got their earnings coming out next week, July 31. So if they deliver, well, then all's good. But
there's
it does have
sky. We know usually in markets it'll probably be terrible and the thing will collapse.
If it doesn't deliver, it'll get a bloody whack on the day.
Yeah, well, it's set up for the false break and the failure, I guess. But I like the look of it. It's such a strong uptrend, and it's already. When was that? That was in 2021. So that's been the high for 4 or 5 years. So really, this could just be a continuation. And the way I'd look at this stock, because it's been around for a long time, is with a logarithmic chart, just to give you a sense of how strong it actually is. And when I look at it from this point of view, I go, this thing is ripe for a continuation. Look at that. That is just getting ready to bust out, I think. So fingers crossed, that one's up $5 in the next few weeks.
Absolutely. I've certainly improved the holiday house, if that was that.
Yeah.
Anyway, so all right, well, we'll check in next week on ResMed if they delivered or not. Interesting one to watch. But yeah, one of the things with that one, if they can deliver on their earnings, is you could see the market chase that one because it's in healthcare and the economy is slowing down and and the market often goes to healthcare when that happens. So we'll see. A very interesting one to watch. Alrighty, we'll leave you with that thought, and next week we'll be back in the studio. So again, if you like the episode, give us a thumbs up or whatever. Or if you want to see Murray chart something, stock you're
click on
interested
the
in.
YouTube. There's a YouTube written on the bottom right of the. If you're watching it on our website on Fat Tail Daily, there's a thing, just a YouTube written there. Click on that. Go to the actual YouTube video and press like if you like the videos. And we've been making you money. We know we have. So we'd like some likes.
Absolutely, get the word out about that closing bell. Alrighty, we'll leave it there and we'll see you next week.
See you later.